First, I appreciate you guys for taking some time out of your night to come listen and some chat. I really, really appreciate it. Tonight, I really want to talk about kind of going forward into 2023 and just kind of setting yourself up for that, right? So, especially at the end of the year, it's very, very important. I know it's going to take a lot of work, but I highly, highly suggest just taking a couple hours over the next couple weeks and just reviewing your tendencies and your trades over the last 12 months, right? So now that does sound deterring, especially if you didn't really do much journaling over the year, but you kind of already know what you need to work on though, right? Like a lot of traders just like, bro, I do this or I do that, I do this, right? And on the surface, most traders or most individuals kind of already know what's going on with what their weaknesses are regarding trading, whether it be FOMOing, not really understanding how to trade, be it like technicals, just like liquidity pools, stop run hunts, like, the ins and outs of the actual market itself. And they get confused about that. Or it could be stuff like emotionals, rather they get on tilt and they get over cocky, overconfident, and they just, size incredibly, incredibly high. I mean, there's tons of different, reasons and thoughts that go in behind that, but in the back of your head, you probably already know what you're doing, right? Whatever the recurring aspect is, not respecting your stop loss, whatever the case may be, right? So that's something that we really, really want to address now before we even get into the new year. And you just kind of want to sit down with yourself and be honest, like, okay, what have I been doing that I know that does not align with who I want to be? Right. And then you just want to be really, really honest with yourself and just sit down, however long it takes, 30 minutes, an hour, 2 hours, just really just carve it up. Like, okay, I've noticed once I'm just, sitting here and thinking about it, I've noticed that over these last 12 months, I haven't really been taking trading seriously. Right. It's like, yeah, I kind of want it, but I don't want it nearly enough to actually, you know, put in the extra 15 minutes a day, put in the extra 30 minutes a day to review my trades, to review the overall market, right? Because that extra 15 or 30 minutes of time will really, really start adding up over, an entire year basis. Like if you think about it during the compounding aspect, if you just focus an extra 15 minutes a day, that's a lot of time over an entire year, right? And that will really, really grow exponentially your learning curve. So something I kind of want to do is like an analogy real quick. So we'll do two different traders. So here's trader one and here's trader two. Okay, so we'll first off, let's do an how do I put it? Let's do a sports analogy because I know a lot of people in here like sports. So, all right, let's think about a professional team, right? Professional teams usually don't play every single day, right? Like they don't really play every single day. What do they normally do when they don't perform? They still work in the background, right? They're still reviewing tape, they're reviewing film, they're scrimmaging, they're working out, they're preparing, right? It's all of the preparation. And honestly, that's something that's really, really misunderstood sometimes is like, oh yeah, trading is 100% technicals and 100% this, so the actual execution of trading is that, right? And that's so far-fetched, right? That's so far from the truth because in actuality, the actual act of trading, clicking buttons, buy and sell is probably 20% of the time, the actual execution. Whereas what actually matters is the preparation. is studying, is preparing your trades, is finding tendencies and finding repeated patterns that ideally work, right? Because if something has happened once in the market, I can almost guarantee you there is a very, very high chance that it will happen again. And you're not going to know that on the surface level until you just sit down and review your trades and review the overall market itself. And just try to spot as many tendencies as you possibly can. Be like, okay, well, like for example, let me go until we'll do this in a second, but let's just do this. So what day was it? It was the 5th. Okay. So on the surface, this looks, what does this look like? Just a downtrending day, right? This looks like just a regular old day. We had a nice downtrend, lower high, just completely sell off, right? But if you actually prepared a little bit more and dug deeper, you'll notice that this day on Monday almost exactly mirrors last Monday. So what day was that again? That was the 28th. So if you look, what do you see here? Pretty much the exact same day. So let me go in over here so we can do side by side. All right, so we get a gap down overnight, we get a fail coming up, right? So we fail coming up and we're not able to break past the key area, we reject, and then we kind of just fumble over the rest of the day, lower high, boom, right? And then around that 1 o'clock, we had a reversal. So we had on the low, we had a backside reversal. So we came down around 1 o'clock, and then we had one more bounce up, another lower high, and like they're not completely identical, but you get the point. Like if you saw this from last week and you kind of wrote about it and you saw on Monday, it's like, oh, what's, this, I've seen this before, right? And I know that there's criteria that I can possibly pick apart, right? So in this case, this secondary move, like, because we kind of just went kind of flat, right? We went kind of flat after the first move. We were hovering around the moving averages, right? We were hovering around. We kind of, like right here, we went kind of flat. But then the actual move happened around 1 o'clock, right? So that secondary move in the afternoon happened at 1 o'clock, same exact time frame. We had that little bounce and then the flush, bounce, flush, right? So you kind of want to pick apart some different criteria and really start, thinking about how you can potentially trade it the next time, because I can guarantee you this type of setup will happen again. And if you prepare yourself for it, you'll know how you want to trade it. Do you want to trade the backside at 1 o'clock? Do you want to trade the morning reversal? Like, what do you want to trade? Because there's no one answer. Every single trader is different. You could look for a reversal here. You could look for a continuation downside. Like, what do you want to do with it? And now this time, since you're a little bit more prepared and be like, oh shit, I've seen this before. Now that I know the tendencies and the criteria behind this, let me kind of start figuring out where can I position myself? Where can I add to the trade? Where can I cut the trade? How long is the bounce usually? How many points is the bounce usually? Because if it's a small bounce, maybe that's not a good criteria, right? So on this one, this is about $1 or so bounce, right? So about $1 bounce, right? This is the criteria that's potentially setting up. Whereas maybe the other bounce, like say there's another Monday, so like next week, and we have something kind of similar like this, but the bounce from the last 2 weeks was about $1, right? We want to see something significant just to trap liquidity and pull it lower, right? Whereas maybe this upcoming Monday might be only like a 20-cent bounce after I'm so sorry. Maybe it's a much more extreme bounce. Maybe it's like a $3 bounce or a $2 bounce, right? So that means buyers are stepping up extremely, right? So that might mean this backside trade, like this rejection trade to fade the rest of the day, might not be valid anymore. So you kind of want to see specific scenarios and specific criteria setting up. And I can almost guarantee you, once you start really diving into the day and be like, holy crap, you'll start noticing things that you didn't see on the surface, because on the surface, you just say, oh shit, it was a down day. But why? Why was it a down day? What happened? What are some criteria behind it? And you don't want to just look only at this specific day. You still want to look at the big picture, right? Like how is the overall market? How was the last couple of days, right? So these are the things you kind of want to be thinking about, right? So going back to the analogy of trader one and trader two, over here. So remember, we were talking about athletes. Athletes prepare 80% of the time and execute 20% of the time. And that's the exact same methodology when it comes to trading, right? You don't want to just roll out of bed, market open, and just YOLO a position, right? Because sure, sometimes it might work out, but if you don't actually know what you want to see, if you don't know specifically what you want to trade, like how you want to trade it and where you want to trade it, then this is when you can unfortunately maybe overtrade, or you can just trade things that are just honestly not in your specific criteria setup, like your wheelhouse of strategies, or you might just FOMO into random ass trades, like C setup trades, right? So the preparation is extremely important to figure out what type of trader you want to be, whether it be a reversal trader, a breakout trader, whatever you want to do, a morning breakout trader, or, a secondary continuation. There's no one right answer. But anyway, going back to the initial point, if you don't really prepare and have a generalized game plan of that day, then you're kind of setting yourself up for failure, right? So that's another thing regarding my analysis people sometimes get a little upset with. They're like, bro, why are you calling both sides? Like, of course it's either going to go up or down. Yeah, that's the point, right? Like, you don't want to just have one specific scenario at a key level. Like, it's not just going to be like, oh shit, we're at this key psychological level and there's only one thing that can happen. No, there's multiple things that can happen at this level. Are we going to pierce through? Is it going to be a liquidity trap? Are we going to reverse? Are we going to have a breakout, retest, and continue higher? Are we just going to consolidate around? Like, what is going to happen here, right? You don't want to just be like, oh, we're coming at this level. It's just going to go higher. Like, you need to have specific, multiple, scenarios in the back of your head. You don't want to just have one specific scenario in your head, because then you start becoming a little bit more subconsciously biased. So that's a main reason why I like to kind of give both sides of the coin when I do my analysis. I don't really like to just have one specific side. I'm just like, hey, we're coming to a really key level. This is what needs to happen for bulls. This is what needs to happen for bears. And then it's up to you to decide what to do, pretty much, right? You just have to look at the price action. But anyway, that comes down to preparation, because if you don't have a decent bit of preparation, you don't really know what to do at a key level, maybe you can make the wrong decision. And because you don't really have much time, it's like a split second decision of either you get in or you don't, right? Because if you don't get in, maybe you'll miss a move, right? I mean, obviously it's okay if you miss a move, but we're talking efficiency's sake. So doing the preparation is important, because now hey, now we're at a key level. I've noticed that we rejected off this key level multiple times. What's going to happen here? Are we going to reject again? If so, I'm going to enter a short with a stop loss right above that level. Or maybe the buyers are actually stepping up this time. We get a swift breakout and then we retest that level. So that level is now becoming a support. I'm going to enter longs there, right? So you don't want to just be thinking one specific thing. You want to be thinking multiple scenarios of what can potentially happen. But so going back to two different traders here. So we'll have trader one and trader two. So trader one, and by the way, we're going to start at the exact same time frame. So trader one starts at year one, trader two starts at year one. Basically day one, they're starting the exact same time frame, but they're going to do two entirely different things. And we'll notice how exponentially trader one's learning curve will be over trader two's. So trader one will actually spend more time every single day reviewing the market, reviewing whatever trades that they took, trying to find any specific similarities possible and just journaling about it and just kind of building a playbook, right? Building specific strategies that you can play, because just because it works right now doesn't necessarily mean it's going to work next quarter, because the market is always ever changing. All right, so that's why building a playbook and constantly updating it and constantly adding your thoughts is very, very important. Because something, for example, something that worked for me last year, I used to use the 1 minute time frame almost religiously. If I use the 1 minute time frame right now, I'd probably get crapped on in this market. That's an example of where I had to kind of pivot and do something a little bit differently, or I'm just probably going to take some losses, right? So anyway, going back to the trader one and trader two analogy, trader one is going to be studying, even if it's for an extra 15 minutes a day, an extra 30 minutes a day, whatever they're, and trader two isn't going to do that. He's not going to review his trades. He's just going to take a trade, whether it's a win or a loss, and just completely just close the computer down, not figure out how to improve, and just pretty much, especially if they take a loss, they're just going to be huffy and puffy and just close their computer and be like, well, that didn't happen. Tomorrow's a new day, right? But if they don't address the underlying issue, then that repeating pattern will just continue coming up and continue coming up. Like, that's another thing that's important to understand, is the 90-90-90 rule, right? So there's a rule that about every 90 days, if you don't catch yourself, if you don't be, brutally honest with yourself, you'll probably blow your account. Like, that's a legitimate statistical fact in this market, because that's about 3 months is a good time frame to either lose focus or get really cocky, or the market change, like the economic change, right? So that's something I used to do very, very often last year. I would have a hot streak for like 2-3 months, and I'd be super cocky, be like really confident. And then one day I would just, I would be really, really emotional, and I just wouldn't have fun, right? So that's something you want to be super, super aware of, is the timestamp about every 90 or so days, right? It doesn't have to be perfect, but you get the point, especially if you're really doing very, very well at the moment. You don't want to be taking that for granted, because the market will humble you very quickly, right? As you guys saw from my trade review on Monday, I took a decent size loss because I got overconfident, and that's something that I exposed. That's a weakness that I expose in my trading that I have to address going forward. Or if I don't address it, it's just going to continue happening over and over, right? So anyway, going back to the point. So trader one is constantly learning. They're, educating themselves. They're watching videos. They're reviewing the market. They're doing as much as possible, right? Because I understand, people have families and people have jobs. So asking you guys to do like an hour, 2-3 extra hours of reviewing every day might seem like a lot. But even if it's like an extra 15 or 30 minutes than you're normally doing, that will really, really add up over time. Like, that compounding aspect will really, really help. And all you really necessarily need to do is like an hour extra a day, right? Because now you don't want to just do that immediately, right? Because if you're not used to it and you just say, hey, I'm going to do an hour tomorrow, you're probably going to get burnt out really quickly, right? So you want to be realistic with yourself and be like, hey, I understand that I haven't really been doing this, so let me start off slow and maybe do, challenge myself to do like 15 minutes, right? Whatever you want to do. You can watch a video, you can, take notes, you can review the market, whatever you want to do. Just start off small. And then once you get a little bit more comfortable, maybe try to challenge yourself to go 30 minutes. and then work your way up to that hour. It doesn't matter how long it takes. It can take you a month, it can take you 3 months, however, long it takes, but your goal is an extra hour per day. Because then if you think about it, the amount of time that you're adding, the amount of screen time and experience that you're adding onto your trading is extreme. So if we just do a really simple example, let's say you take the weekends off and you do 5 days. So that's 5 hours, and then that's 20 extra hours a month, and that's over 240 hours a year, right? So that is a lot of that's a lot of extra hours. So then let's compare that to Trader 2, who doesn't do that. He literally just closes his computer, he wakes up 5 minutes before the market, he just basically buys whatever because he doesn't know what the hell he's doing. Whereas Trader 1 is prepared. He's up, he's looking at the pre-market, he's trying to figure out what he can do, right? He's analyzing the overall market, he's taking it much, much more seriously. So who do you think is going to be better, right? If you compare both of their journeys, Trader 1 and Trader 2, after 1 year, they both start at the exact same time period. Who do you think is positioned better? Who do you think's learning curve will be better? The answer is clearly by far Trader 1, right? So Trader 1 will 100% be better because he's taking it much, much more serious. Trader 2 is half-assing it. So, and then another thing, like Trader 2 could be on, let's just say, just given a very good comparison, Trader 2 could be doing this for 4 years, not really knowing what to do. He's kind of just, skidding by in a sense. He's not really like super negative, but he's not super positive. He's kind of just, in a sense, flat because he's not putting in that extra work. So he's 4 years in. And then Trader 2, he could be basically 2 years in. He could be 2 years behind Trader 2, but still exponentially further along because it doesn't really matter the time duration, right? Trader 1 could be trading for a year, but still be way, way further than Trader 2 at year 4. Right. So time duration in the market doesn't necessarily really matter. It's the amount of efficiency that you put in. It's the amount of extra work that you put in. That extra 15, 30, 45, 60 minutes a day over the course of every single day. Yeah, it's definitely, it takes a lot of discipline. It's a habit for sure. Like with every other habit, the first 4 weeks is probably going to suck dick because you're not used to it. But once you actually get used to it and, you have, it kind of gets more into a routine in a sense. You're like, well, I'm used to it at this point. I know that my training day is not over until I journal it, until I write a synopsis about it, until I write about the market overall today. I just know that this is in my routine now. So the first couple of weeks is probably going to be a little, overwhelming per se, especially if you don't really do this at the moment. But once you get the hang of it, it's really not too bad, right? And then you kind of just want to just be really, I'll show you an example of my journal. Absolutely. Just give me a couple minutes. But just to finish the thought bubble, you kind of get what I'm attempting to showcase here. Like if you're just thinking on the surface level, like we did when we compared those 2 Mondays, and you're not really analyzing the specific trade itself and the specific tendencies of the trade, then you're kind of setting yourself up for failure. You're how do you put it? You're just not really preparing very often. And if you actually want to be profitable in trading, you have to work for it. You have to put in some preparation. You can't just skid by, right? Because even if you do get a really nice gain, let's just say you make a big bag, but if you still don't really know what you're doing, then the likelihood of you losing that money is very, very, very high. Example, the people in the Corona, all the people that were in the Corona bullish run or the AMC run or the GameStop run, I haven't heard from them. Where are they? Where the hell are they? My one buddy, but God bless his soul, he made like $200,000 on AMC and GameStop. The poor guy he lost like $190,000 of it because he didn't know what he was doing. He got lucky. And the market was incredibly bullish. Now that the market is more choppy or more bearish, people are falling off. They don't know how to trade because they thought that trading was necessarily really easy. Well, of course, it's relatively easy when the Fed are injecting trillions of dollars into the market and the market goes straight up for months. You can just buy a call position and you're probably going to win. But now that the market is, more, I would say, I wouldn't say like super difficult, but it's more normalized, right? Because we just had a massive bull run for years. But now that we're in a sudden bearish market or a choppy market, people just all of a sudden don't know how to trade, right? So this is when true traders are actually formed, right? Because if you can handle this market, you can handle sideways, volatile, news-based, market. Whenever the market is actually trending again for weeks and months at a time, that's going to be a breeze for you. Like you'll be perfectly fine. So as long as you take it serious now and set yourself up for the future, then you'll have so much easier time going forward. Because bull runs will happen. Like there's a statistic that I posted in the chat the other day. There's out of all of the depressions and recessions that we had in the stock market history, most of the bear markets only usually last for about 12 months, anywhere from like 8 to 15 months. So, we'll be fine sooner or later. You just have to, you keep afloat in a sense. You don't want to just keep blowing your account over and over. You want to at least learn and figure out how you can, defend your capital, because at the end of the day, that's what matters is your capital. Like if you don't have capital, you want to think of this as a business. If you're a business owner and you don't have capital, you're going bankrupt, right? That's the exact same analogy when it comes to trading. Your capital is very precious. If you don't have it, if you don't take it, serious, then you're just going to keep blowing it and over and over and over again. You don't want to bankrupt yourself, right? So especially if you're like a newer trader. And so this is kind of talking to people within, I would say, like under a year experience, especially if you're like under 6 months experience. By the way, side note, welcome to your trading journey. I'm very proud of you. But anyway, sometimes people come in like really aggressively and they put in like 25 or $50,000 into their account. And I highly recommend not doing that, because I guarantee you, if you put in that much money for your first go around of your account, you will blow it. Like every single trader I've ever talked to, every single trader blows an account. If someone tells you they haven't blown an account yet, they will. I guarantee you they will. Every single trader does. And that's okay. It's learning lessons. It's mistakes lead to great learning lessons, right? So I would highly recommend, if you have a relatively, large account, and if you don't know what you're doing, especially if you don't really know what you're doing, I would really suggest just not using that account and maybe just, using like a $2,000 account, like a $5,000 account. Nothing like super a lot, but nothing super small either. Because yes, you can grow with a $500 account. Absolutely. That's how I started. But I mean, if you can afford like 2,000, maybe even 5,000, that's perfect. Like you don't need 25K, you don't need 50K to make money, right? And also, if you don't know what you're doing, there's a high chance that you'll probably lose that 50K and then you'll be really pissed at yourself a couple months later. All right, so if that sounds like you, just do yourself a favor and de-risk yourself. You can still use that money if you really want. Just put it in, long-term positions, maybe like a Roth IRA, ETFs or whatever. You don't have to just put it in a savings account, but you get what I mean. You don't want to just actively use that on a short term, options or futures trading, right? So until you get much more comfortable with trading and with trading size, because trading and trading with size are entirely different. Because yes, fundamentally it's exactly the same. Like the strategy and the criteria don't change per se, but what changes is your subconscious brain, because in the back of your head, instead of entering one lot, you're entering 10. Instead of entering 10, you're entering 30. So in the back of your head, you are risking a lot more money, and you just have to be okay with that, right? So, and if you're not like used to risking, a couple $1,000s per trade, and you just kind of just don't really know how to trade per se, you're going to get really, really uncomfortable seeing yourself down like $1,000 in fucking 60 seconds. But anyway, that's my little spiel on that and account management. And I would really, really recommend, kind of a side note that I'm a huge advocate for, is if you are struggling, right? If you're really, really struggling, actually, hold on, let me address that comment in the chat. You need to get used to seeing P&L. No, you need to get used to seeing percentages, right? You want to turn your P&L off, because subconsciously you don't want to see yourself down $300, right? Whereas, yeah, you might be down $300, but if you look at it percentage wise, depending on your account, that might be down like 5%, right? So it's entirely different, right? Because being down 5% relative to your account size is cool. It's not that big of a deal. But if you see, you're down 300, you might be thinking, holy crap, that's a lot. When in reality, it's only 5% of the position, which, yeah, obviously you don't want to lose money per se, but 5% is, yeah. Yeah, absolutely. I know what you're saying. I just kind of want to just bring that up just in case people, yeah. That's not an option on Tastyworks. I haven't used Tastyworks in a while, so I'm not too sure about that. I can't really speak about it. But going back to the initial point, oh gosh, what the heck was I talking about? Oh yeah, especially if you're a newer trader and you're kind of really, really struggling, I would really honestly just recommend just buckling down and investing in yourself, investing in education, investing in books, investing in a mentor, investing in some sort of course or education from a reputable person. Keyword reputable, right? Because there's tons of unfortunate fakes nowadays that kind of pop up out of the woodworks. So you at least want to resonate with the person you're trading with and learning from, because especially it depends on your specific situation and your specific aggression levels, right? Because like say for example, you find yourself very, very aggressive, you like to scalp, and you like to trade breakouts. Whereas the person you're learning from is entirely different. They are very conservative. They like to trade reversals. Now, I'm not saying that's inherently a bad thing that they have a different point of view from you, right? Because experiencing other point of views are very important. But I'm trying to say you want to align yourself with someone that at least has the general core aspects that you're looking for. If you want to be a breakout trader and you want to be a breakout momentum trader, that's cool. Learn from a breakout trader. If you want to be a supply and demand trader or a reversal trader, you like to trade that type of stuff, seek someone out like that and trade, learn from them, right? So that's honestly something that I would recommend, especially if you're like on the fence about it. I always think to myself, I wish I did this sooner, because the first year of my trading, it's the common like ego, right? I thought I knew everything and I was so stubborn, and I was like, nah, I'll figure this out. I'll figure it out. Don't worry about it, right? And I just wasted literally 12 months of my time. I wasted time, I wasted resources, I blew accounts, and I didn't really do anything. I didn't move on the scale. I was pretty much still stagnant in a sense. And then I finally, on year 2, I was like, okay, this is getting nowhere. I'm clearly, I'm getting too stubborn for my own good, right? So then I'm like, all right, I need to invest in myself. I need to invest in some sort of education, some sort of mentor, right? And thankfully, I've met a lot of great people over the last couple of years that helped me along the way. So I'm very, very grateful for that. But if I didn't do that, I'd probably still be, on the rabbit reel, right? I've been on the rabbit reel, just kind of just going up, down, up, down, up, down, instead of just up, right? Because your P&L and your learning curve should go up, right? It shouldn't just go, right? Like ideally, yes, having plateaus, you'll have plateaus sometimes, but like ideally you want to continue always challenging yourself and being consistent, right? So that's something honestly I've talked about plenty of times before, but because people ask me, hey, if you could redo your trading career all over again, what is something you would really, really focus on? And it would be just taking it seriously up front. Because the first year I didn't take it seriously at all. And honestly, this was during like the bull run. I didn't take that shit seriously. So if I did, I'd probably be well over a millionaire right now. And I'm not even joking. If I took it seriously my first year and actually be aggressive during that time, I would 100% be a seven-figure trader, and I know it for a fact. But I didn't take it seriously, and I missed out on a fantastic opportunity that doesn't come around very, very often. Right. So that's something I really honestly regret doing, is just not taking trading seriously and not thinking of it as an actual profession and career. And I just didn't focus on education. I didn't journal. I would get really pissed. I would just, I would, how do I put it? I would take a loss and just close my computer, and I would act like if nothing happened. I would sweep it under the rug, and then the same thing would just happen over and over and over again until I realized, hey, this isn't going to change until I, change it myself. So then during year two, I started focusing more, and thankfully I did, because then, it starts getting better and better and better. And you'll realize once you actually start educating yourself, it's like, wow, during year one, I thought I knew everything. But now that I'm actually, you know, getting more educated, I actually didn't know shit. Like during year one, I didn't know shit. It was kind of like the reference when you're looking through a keyhole and you think you know everything, but in reality, you didn't open the door yet. And that is when you finally realize, oh my goodness, there's so much to learn about the in-depth intricacies about the market, because the market is ever changing, right? Like if I learn something new every single day regarding the finance field, I'd still be learning stuff new every single day for years. That's how vast the overall spectrum of this is. So me being super confident and super arrogant and egotistical my first year, probably like my first year and a half of trading, I thought I knew everything. In reality, I didn't know anything, right? So, and that's another reason why I just took significant losses. Like I'm transparent. I've probably blown like 10 accounts, and I'm not ashamed to admit it. They're learning experiences, every single one of them. And but if I had the choice to go back during my first year of trading, I would be like, hey, bro, you're going to save yourself a lot of time. You're going to save yourself a lot of money, right? Just focus on education. Don't think about the money, think about the consistency. When you think about the consistency and just taking good setups, the money will come, right? The money will come to you, because sometimes people think the opposite. They think, holy shit, I'm going to be such a good trader, I'm going to make so much money, but they don't know how to trade. They're just too busy thinking about the end goal. They're thinking about the money, and they're not thinking about the process to how to obtain that money. Like okay, what are the steps that I can take? How can I be a more efficient trader to actually, make this money, to how to size up and be efficient with my trades? Because it's one thing to make like 20 bucks or something. By the way, I'm not discouraging that. I'm not shitting on that. Money is money, profit is profit. But it's one thing to make $20 and act as like it's a hobby. It's an entirely different thing to consistently make like $200, $500, because that's compounding that over and over and over. That's a lot of money. Like that is a lot of money, right? Like if you just do $300 a day, which sounds like a lot, but in reality, it's really not. That's 70 extra K in your pocket per year, right? Because and another thing, since I'm getting on this topic, you don't want to be small-minded, right? Because when I first started trading, I genuinely thought like making $50 a day was a lot, like a lot of money. Which, by the way, once again, I'm not discrediting that. That is still extra income. Money is money, and then if I'm making it sitting on my ass, I'm very grateful. But efficiency-wise, I was thinking really small-minded. Once I started surrounding myself with like a bigger fish in the pond, and I'd see them make a couple $100 or a couple $1,000 in a day, I'm thinking to myself, why am I thinking so small, right? Why am I thinking so small? How can I get from here to there? How can I get from level 1 to level 10? How can I get to level 10 to level 30? How can I get from me to them? Because I'm not jealous or anything over them. I'm envious. How do I, how can I get the steps to get there? Right? Because I know I'm able to do it. I just need the roadmap in order to get there. So then I would just sponge information off people. I would just learn as much as I could and just be like, okay, how are you doing this? How can I, how can I, I'll basically just pester them. And I wouldn't say pester, but you get the point. I would just constantly chat with them and be like, hey, what are you doing? What's your strategy? How do you learn? Blah, 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 blah. And I would just gather all of the information, because you don't want to just copy and paste what they do, because it might work for them, but it's not potentially going to work for you. So what I ended up doing, my strategies are pretty much a mixture of like 5 different people's strategies. Like I kind of just cherry picked something that I resonated with, took something from them, maybe not took something from them. I gather the information from them, and then I use it and to build my specific strategy. So I have multiple people's strategies, not just copy and paste cookie cutter from one person. Right. So that's really important to understand. You don't want to just have a cookie cutter, methodology, because like I said, every trader is different. Every person's viewpoint is different. I could see something and you could see something entirely different, and that's okay. So, but you at least want to have the ground formation. You want to at least have the core, right? Um, uh, Chat, why did you go into CVS and Google? My name is not Brett. I'm Scrub. I didn't enter Google. I didn't enter CVS. Appreciate that. Okay, back to the point with the psychology. As Penny said, just trust the process, trust the consistency. Small gains add up. Compounding is king. You know, if you're struggling, I would highly, highly, highly recommend just being more consistent with yourself. Just, instead of getting on a video game or instead of watching television, right? Challenge yourself and be like, hey, I'm going to use video games or I'm going to use television as a reward, right? I'm going to use this as a reward. I'm going to journal. I'm going to do my due diligence. I'm going to prepare myself first, and then I'll relax, right? I'll do whatever the hell else. I'll for me personally, my reward to myself is gaming. I'm definitely a huge nerd, so I tell myself I will not enter a game. I will not play games until I finish my journal for the day. Until I'm finishing, finish up my work for the day. I refuse to, play games. So that's my reward. So kind of find your reward that you really like doing. Anything at all. It could be working out, it can be gym, it could be, reading, video games, television, whatever you like. Use it as a reward and for your motivation. So this way you can start doing your journaling and being more accountable with yourself. Like that's an entirely another reason why I have that, accountability challenge that I've been doing, where you put your trades in every day. By the way, thanks for putting some of your trades in. I've read some of the trades. They're really, really nice. So if you're not in the challenge, I'll send the link again, but super helpful. That's pretty much my nutshell. To sum everything up, education, consistency, compounding. Don't be like, trader 2, be like trader 1. You want to always constantly challenge yourself. Any questions? I'm going to open it up now. So hope you learned some cool stuff. Hope you resonate some cool stuff. One sec. Let me read some comments. All right. So docu earnings today went really well, up $4 after hours. How would you play it tomorrow? Oh, nice. Nice. Wait, that was today? I thought that was the other day. Oh, perfect. I am misunderstood. I must have been thinking about Chewy. Okay, so docu, what you want to be seeing. So this is actually a really, really nice move. Ideally, there might be profit takers in the morning. So if you see a little bit of a morning washout, but as long as we hold this general area, then we could continue upwards, because docu has actually been really, if you look here on the daily, it's actually been known to have multiple day runners after earnings. So gapped up, had another day of continuation. This one actually gapped down and had a couple day continuation. So you can play it both ways. This one gapped down and had literally like an entire week of continuation. But you get the point. Like there's an edge here, right? Because it's oversold, it's a growth name, it's high short flow. So this is a criteria that you want to be looking for when it comes to post earnings names. One that really resonates with me is Roku. Like Roku was super oversold, right? High short float, and you can kind of see what happened after earnings. Gap down, continuation up. Huge gap down, continuation up, continuation up. So like you can get 2, 3, 4 days of just really nice continuation moves. And you want to, especially as a short-term trader, you want to be, aligning yourself with this, right? You want to be trading around these, because this is where you can make a lot of money. Like for example, like this off the lows, this went up 40%. Now I'm not going to say you're going to, catch all 40% of this, but even if you call it half of this, bro, that's a lot of money for a week. You know what I mean? So hope that helps. How come you're not going to hold Disney and Apple over the weekend, even though you bought time? So Apple, I'm not comfortable holding over the weekend because I did not buy enough time. Uh, December 16th isn't really that much time. And you have to remember Theta ticks you over the weekend. So I'm basically getting ticked Saturday, Sunday, and Monday right off the bat. And I'm not comfortable losing basically another $50 off my premium. Just, I don't want to do that. So now Disney, however, I'm okay with. Disney, I do have December 23, so I'm not too upset if I hold that over the weekend. Ideally, in my plan, I wanted to just hold until Thursday or Friday. I might end up pivoting and hold over the weekend, but for Apple, I'm looking to cut tomorrow, whether it's for a loss or for a small gain. I don't really care. I just don't want to hold it over the weekend. That's me personally. If you want to hold it, by all means, but I just don't really think December 16th is that much time, because it's really not. December 23, that's fine. Can you talk about how to grow and start with futures, especially with 1 or 2 micros and commission costs? So yeah, I would really recommend utilizing a platform called Tradeovate, especially if you're starting from a small account, because the margin requirement and the commissions are very, very cheap comparatively to other platforms such as Thinkorswim. Like for Tradeovate, you can comfortably start with like a $500 or $1,000 account because the micros are so inexpensive. And then everything else is the same, technical analysis wise. Nothing inherently is different. You would just have to be much more aware of like liquidity pools and how the overall auction process works and stop run hunts. You have to be very, very aware of that. And another thing you want to be aware of, it's key levels and key regions. Like psychological levels matter tremendously in futures. So you kind of just use that for reference point. But if you're ever curious about that, just message me and we can talk shop about futures, or maybe I'll just do like a futures little introduction sometime next week. So we'll do that. Do you use TradingView as your main for charting? Yes. Yes. What were your favorite small tickers when trading on a smaller account, less than 1K? Honestly, I've been more of a tech person. I've been very tech heavy for a while. So a couple of names that come off the top of my head. Um, I would say, well, Snapchat used to be good. Now it's kind of like, eh. Disney's not horrible when it moves. Apple's pretty decent. AMD's pretty decent. I also really like trading indexes such as SPY and QQQ with like a 1-day expiration. Yeah, you don't really need a lot. As long oil's pretty decent if you like trading breakouts, right? So it really depends on what you want to trade. Because if you're trading breakouts, then I'd highly recommend just trading oil or possibly I was gonna say growth sector, but that's not really super beginner friendly. Oil is relatively pretty beginner friendly, so oil stocks such as like Exxon and Oxy are pretty decent and quite cheap. Hope that helps. Can we see an example of your journal? Yeah, absolutely. One sec. So let's talk. Yeah, let's talk shop about my Monday real quick. One sec. What the hell day was that? That was the 5th. Wait, do I not have it in here? Hello? Okay, hold on. It's I have it over here. Wait, do I not? Here it is. One sec. I know I put it in the I'm gonna talk about my really subpar trade this week. Just for fun. Nope, not this one. Is it this one? Ah, it's this one. Yeah, here we go. Oopsie poopsie. It's this one. There we go. Sorry about that. Okay. Okay. So this is my trade from Tuesday. It was absolutely abysmal. Kind of just to give you the introduction to it, I was really overly confident with myself. I was on a pretty decent hot streak, didn't really lose for the entire month of November. And I came into this December with the mindset that like, hey, I'm gonna, make this market my bitch. And I ended up having a one-sided bias on Tuesday. And as you can kind of see here, it didn't go very well. I attempted to long a very bearish day. And instead of taking a cut and just, accepting the cut and accepting a small loss, I continued to add very, very aggressively. And yeah, it wasn't pretty. So I ended up writing about it. Rating was garbage. It was 1 out of 10. Um, largest account loss in a while. The last one was October 13th when I fought the market maker's mechanic. By the way, this is why I talk about the market maker's mechanic most of the time. You don't want to be on the wrong side of this. I was one day and I got shit on. All right. So the actual, you know, trade entry was justified, right? Because for a reversal trader, this is where I want to enter. I want to enter low of day. So this entry was actually decent, but the management, however, was not, because my stop loss was supposed to be under here. And instead, I just kept adding and adding and adding and adding and adding. Right. So I was in well over my normal size. At one point in time, if you remember what I said about this the other day, I was down like 40% of my account because I was that aggressively heavy. So I wouldn't recommend doing this. As you can kind of see here, it kind of set me back a little bit. Mistakes were made. But anyway, so I didn't really cut very much. I only cut one contract, which I should have cut more in retrospect, right? Mismanagement, I took the green for granted. I only cut one contract instead of a couple right here on this rejection because it ended up forming a lower high. Right. So then price action reversed and I entered again on the stop run hunt. That's okay too. This is justifiable, but not cutting and continuing to add was not justifiable. And my justification was I'm on a futures account. There's no Greeks. This will probably bounce. I'm already down. Let's just continue to add, right? So this is pretty much what I do. I just do mistakes, my improvements, my kudos, because you always want to give yourself kudos. You don't want to make this a negative experience. You don't want to make this a negative experience. Give yourself a kudos, even if the trade was really poor. My kudos in this case was I entered at a good value area spot. So the trade was, the entry was fine. The management, however, was not fine. But as you can kind of see here, I just break down the overall day, what I did incorrectly, my entries, my exits, like that's just pretty much my journal entries. And then you would go a little bit more in depth with oh, not this one. What day would it be? Here. You would just kind of go more in depth with like the overall market breakdowns, your initial thoughts, you get more in depth with it, right? So this is what I mean about just taking extra time to be prepared, um, because that extra preparation will be really, really important. So I would recommend just keeping this on. For my platform, I use Notion. I wouldn't really recommend Google Docs for this because you want to have, like in my case, I have a playbook, I have, you know, my overall journal. So, but yeah, hope that kind of sheds some light into the thought process behind it. If you're curious, I do have, my other trades and other people's trades inside this little account challenge I'm doing. So, you can definitely check more into it. I'll drop a link of that actually right now in the chat in case someone wants to join. What? Hold on, let me read some more comments. Give me a sec. Do you offer classes or mentorships looking to go into 2023 Beast? First off, I appreciate you very, very much for the interest. It means a lot. Secondary, yes, I do. I'm actually going to be hosting a January class. So if you're interested in that, just feel free to message me privately and we can talk shop. But it's probably going to be about 30-hour duration over the course of 3 months. I'll teach you everything I know, A to Z, how I trade, my thought process, everything that you want to know. Yeah. So if you're curious, just message me privately and we'll talk about it. Appreciate you. Uh, what do you think about Chewy? Honestly, I think Chewy will be fine because Chewy is another one that's been known to do multiple day runners, right? Multiple day runner, huge multiple day runner, right? So especially since Chewy's in like a big, big consolidation, I mean, honestly, can go either way. But I think we hopefully, I'm not too sure, but hopefully we can at least contest, the top side of this channel. So we'll see. But we do have earnings. Oh, it was today actually. Thought it was tomorrow. Oh, okay. So just keep Julie on watch for tomorrow. Ideally, all we really care about holding is 40. That's a psychological number. If we can hold 40, we can make our way back to like 43 and 45. Will you be doing a class on book map and tape reading? Yeah, sure, I got you. How accurate is TradingView compared to other platforms? So if you don't have real-time data, it's not accurate. If you pay for real-time data, it's like $2 or $3 extra a month. It is accurate. What software is that you're using the journal? So this is the software called Notion, and I also use TradeZella. With as volatile as futures are, why not swing them? Obviously more exposure, but feels like it always comes back to the key level back and forth in the market. Yeah, absolutely. You definitely could. You would just want to be staying on the next front month. So actually the back month, technically speaking. So instead of, this chain, you would be rotating into the next March chain. You always want to be buying more time, especially if you swing in futures, or you can get blown out of the water. Absolutely blown out of the water. Is Thinkorswim chart? No, I Thinkorswims are absolutely, yeah, Thinkorswim's charts are accurate. I just preferably don't, um, I don't like the layout. So it's just kind of just a personal preference. I find more value in trading view for sure. Hold on, let me see if there's any other questions. Oh, by the way, here's the link to the accountability challenge if you want to hop in with us. And also, I know someone was asking about um, my information to get in contact with me. So 1 sec. There you go. Would love the tape reading book map video and how you have it set up and intro. Yeah, absolutely. Yeah, I'll do that next week for everyone because I know people are interested in that for sure. I've been meaning to do that, so I'll do that next week for you guys. We'll do a little book map session, a little bit of tape reading, and yeah, yeah. Thoughts on PPI tomorrow? I have no idea. Well, we'll find out tomorrow. It's definitely hard to gauge that information. It can be either it can go honestly either way. We'll find out more in the morning. That's another thing, kind of just a side note real quick. Um, I don't really make super in-depth analysis the night before per se, because anything can happen overnight. Like the market can gap down, the market can gap up, and like all the information that I just worked on can be completely out the window. So something I do instead is kind of give myself a broad scenario of what can happen. Like, okay, here's scenario one, here's scenario two. Right. So this way it's just a broad scenario. I don't, put that much effort into it and it just completely gaps down tomorrow and it's completely not necessarily wasted, but because you're still getting the experience, but you kind of get my point. I usually make the analysis more so during the morning once I have more information. Would you consider live trading at some point, talking through what you're seeing? Yeah, I'll do that. Or I'll start because something I've been doing lately because I haven't really um that's something I've been slacking on, just to be transparent, is recording myself trading. Because sometimes people get like really bored just sitting there for like an hour or two because I don't trade a lot. I'll probably take like one or two setups a day. And people get really bored of that because I attempted to live trade like, at the beginning of the year. And people just have really false expectations per se. They're like, bro, why are you not taking a trade? Because, bro, there's no trades. Like, relax, man. There's no trades. I'm not going to just take a trade because you want me to take a trade. Right. So something I think I could do instead of people just sitting there for like an entire hour of me not taking a trade, I think I can just instead just record myself and then just have some commentary overwards and then just clip it down. So instead of you sit there for like 2 hours, you'll have like a 15-minute or 30-minute video just to watch like a live trade. I think that's probably much more educational per se. Yeah, I'll start doing that. I've been slacking on that for sure, but yeah, I'll do that for you guys because I know people have been asking about it. How do you read the gap ups or gap downs for how the day is going to go? There's been a lot of reversals off the gaps. Yeah, that's a good question. So, it really depends on the overall context too. So, like, where is the gap at? Wasn't there a gap this week? Where the hell was it? Ah, here it is. Yeah. So this is for the news on Friday. We had a massive gap down. We ended up actually forming a nice 286 support here, and then so the we actually need to see we need to see aggression when the market opens. Like if we get a significant gap down or a gap up, in whatever direction we gap, we need to see direction. Like we need to see aggression from that participant. So in this case, there was a lot of selling participants and the sellers were getting throttled in the morning in a sense, like they didn't step up, right? They need to step up in the morning for to have a continuation. In this case, they didn't. So there's a very high chance that the bulls will take control and the first real target will be that gap fill. As you can kind of see, we came right to the gap fill, right? So that's kind of just one way to how to trade gaps. If it's a gap up and the bulls did not show aggression in the morning, they're getting pushed out, then that's what's known as like gap and crap. So it gaps up, the bulls did not show aggression. They got, outweighed. And then we crap, we roll over and we fill the gap. So that's how you trade gaps. Hope that helps. With a 2K account as an average, at least two trades per, I'm sorry, with a $2,000 account is an average of at least two contracts per trade a good amount. Yeah, absolutely. What contracts do you use? I'm sorry, what indicators do I use? I use the 200-day moving average, the 300-day exponential. I use the VWAP, and I also use the point of control. Sometimes I sprinkle in the 34, and yeah, that's pretty much it. Oh, also the anchored VWAP. Other than that, nothing else. Mm, would you use the 20 and 50 EMA? The 50 EMA is pretty good. The 20 I only use in certain criteria. So usually I only use the 20-day moving average for trending markets because it acts as a magnet. So, okay, well, what do I mean by that? One sec. So usually I only use it on the hourly time chart, by the way, as well. So when we get really, really extended like this, right, the price action wants to gravitate back to fair value. In this case, this 20-day moving average on the hourly time chart is acting as fair value. It's acting as a magnet. So we got really, really extended from it. And you can kind of see right where we came back to. So we can use this to our reference point. We could take trades around this. We could take trades for a short side, the high a day rejection, and use this as a full target. Or we could take bounces off this and use that as an entry. You could take it two different ways. There's not just one answer to it, right? But that's usually how I use it, is when we get really trending and I don't really know where the support will be, right? I can use this as a gauge of, okay, there's probably going to be people stepping up here, right? So they stepped up right here again. Where's another good example? Right here. So super, super far away from the moving average. Guess exactly where we rejected at, right there. Right, it's acting as a magnet. It likes to gravitate back towards it. Usually I only use this on like the hourly time chart. I know people use it on the smaller term time chart. That's perfectly cool too. I just personally like to use it for trending markets. During like choppy markets, it's not really super valuable in my opinion. So I would recommend just checking this out if you haven't yet. Hourly time chart, bear flag. I mean, yeah, you could consider it. I wouldn't. Yeah, I mean, yeah, you can consider it. Absolutely. I think just kind of the analysis for going into tomorrow, I'd like to see us break above here and retest around this general area. So depending on how the news is in the morning with the 8:30 news and the 10 o'clock news, we could see, I mean, it's at a make or break it. Honestly, we either just completely dump or we come right up here. So it's difficult to say for sure, but overall, because it's we're going into a Friday, there's definitely going to be some sort of volatility with the two different major news economic data. So either we go to 280 ish, blow of day over here, or we come up to like 285 to 287. That's pretty much the broad analysis for tomorrow. I don't really think we're going to be range bound. We're either going to go down or up. I'm not too sure which way though. But we'll see more in the morning when the 8:30 news drops. We'll see how it goes. Any other questions? I know we stayed on call for a bit today. Oh, okay, that's a good one. Why do you prefer to trade QQQ over SPY? Yeah, that's a great one. So SPY ETF is a lot of things, right? It's a lot of things, such as, industrial stocks, airline stocks, pharmaceutical stocks, it's a lot. Whereas, so it's kind of a little bit harder to gauge sometimes, whereas QQQ is straight tech, right? So it's a lot easier to manage just straight tech. I don't like trading SPX whatsoever because the spreads are absolute shit. I don't like trading something with $50, $100 wide spreads. The fills are literal shit. I'm not shitting on SPX whatsoever. For me personally, I don't like it. I prefer my baby girl QQQ. I have a toxic relationship with her. I love and hate her at the same time. But yeah, I like things with really tight spreads. Anything over $10 to $15, I just don't really entertain. NRBO. Yeah, sure. What is this? I haven't heard of it. You're showing me a penny stock. Okay. All right. I like it. I like it. I'm not really sure how you want me to do analysis on a penny stock, but we'll go to it. Okay, analysis real quick. We're in a big tight ass range. That's pretty much the analysis. We have a gap up. If we break out of this range, that gap is the first target. If we reject, then this is our target. Penny stocks are incredibly difficult to do analysis on because one whale can just come in, honestly, and just completely overshadow your analysis. Because if someone comes in with like $2 million, bro, your technical analysis is out the window. They do whatever they want with this because it's such small volume. What are considered A+ setups? Great question. It depends on who you ask, because for me, my setup can look entirely different from your setup. So if you're a breakout trader and I'm a reversal trader, our setups are different. By all means, they are completely different, right? So it really depends. You kind of want to do it in step by step. It depends on what you want to trade, what time frames you want to trade, then you kind of go into like, okay, I know what time frames I like to trade. I know what I want to trade. Now, what are the criteria I want to see in order to get into this trade? So like me personally, I'm a reversal trader, so I like entering at high of day or low of day. Like that's where I like to enter on. So like example, because I learned this on the other day on I think Tuesday. I think it was the 29th or the 22nd. Let me see. Probably the 22nd. Yeah. So this is a great setup that I like to take, right? So we have a failed breakout in the morning. We get a rollover, right? We come down to a key liquidity spot. We get that low of day pierce, and then we grab some liquidity, and then we reverse. This is where I like to enter. And then my stop loss are super tight. Right. So on this specific day, I believe there was a VWAP sitting down here, and I believe, if I remember correctly, let me look. Nope, not on the 5. I think it's on the 5-minute chart. Let me see. It could be incorrect for this specific one. Let me see. Nope, not for this day. It was a different setup. But anyway, same thing. I like to see low of day, and I like to see us hold it low of day, get the peers, pick up the liquidity, and I like to enter here because if I'm incorrect, it doesn't really matter in the grand scheme of things, right? Because I'm risking, 25, 50 cents in a cent, I'm not really risking very much. So even if I'm wrong, I don't lose that much money. But if I'm right, oh baby, right? I'm not saying I'm going to catch the entire top, but even if I catch half of this, my risk reward is significantly in my favor, right? I'm risking, like, for example, let's just say I go right to here, like not even the full move, right? So let's just say I enter right at the low day. There's my risk, basically like a little bit underneath. And let's just say this is my first target. Right here alone, this is 6-1. Like that's great. Now let's just say I have a runner, right? Maybe I get to, 8-1. Right. So also you have to remember my stop loss is no longer down here. My stop loss is being moved with the trade. So it's actually a lot better than 8-1. It's probably like a 15 to 20-1. So that's why I like to play reversals. They are incredibly risky if you don't, know how to read price action, and you get in prematurely. It can skew your risk to reward, and you could be buying a falling knife. So that's something to be aware of. But anyway, going back to your initial question, you just have to be aware of what you want to trade, and then you figure out what criteria you want to see. So like breakout trading and reversal trading are different. The core values are volume though. Like you need to have volume. Like that is like the core value. Oh geez, lots of questions just came in. One second, hold on. Can you throw some light on how you backtest your setups? or the process you follow while developing a setup that works. So kind of like how we talked about in the beginning of the class. Remember when we compared both of those Mondays, like this Monday and last Monday? You just kind of go back to really good days. You go back to really, really good days, like trending days, and you just break it down as much as possible. You break it down and be like, okay, this is what happened basically minute by minute, like hour by hour. Try to find as many criteria you can find. And then if you see that type of thing happening again, then you compare it and you just update it. Be like, okay, well, last time this happened, now this time this happened. Maybe this is, not valuable, but maybe this is. You kind of just compare different situations that have already happened. So this way you can start building more criteria and back testing specific setups that work for you. Hope that helps. What are your favorite time frames for intraday trading? Usually I like to trade on like the 3 to 5 minute, and I like to just flip around from anywhere from like 3 to hour or so. How do you know that's the low of the day? Because it flushed underneath. There's no pre-market low, and we broke below yesterday's low. So here's yesterday's low, and here's pre-market low. So we broke below low day. So for example, if we broke above high a day, in this case, it would be above pre-market high, and our next target would be yesterday's high a day. And if we break above that, it would be this pre-market high. All right. So especially as an intraday trader, you want to be really, really aware of the last couple of days price action, the lows and the highs of that day, because they usually often come in play. What I mean by that is, so this week on November 14th, this weekly low came in play again the week prior. Now it's not perfect. It was about like 50 cents lower, but you get the point. Like it this week ended up magneting to this week over here, right? So it's just a helpful reference. Just looking at previous days lows, previous days highs, weekly lows, monthly high, monthly low, because they're going to be all support and resistance regions. Hope that helps. Oh, this is a big one. Give me a second to read it. What factors do you consider or like to see in price to determine which way price will move when watching price action from different time frames, different time frame EMAs, areas of value, etc.? Do you factor in daily EMAs, 4-hour EMAs when trading, of course, with areas of value, price points? Yeah, you definitely want to look at all these different variables. Another thing to add into that I've been using lately has been watching market internals. Also watching the volatility matrices, the vol-Q and VIX. That kind of helps me out with determining my analysis, because if they're everything is aligning with my theses in a sense, that's just extra confirmation. Would you purchase a call in an immediate break of a key level, or do you wait for a break and retest of the key level? I wait for a retest of the key level. I am not a breakout trader, but if I do trade breakouts, I would always trade the retest. Over the last year or so, hasn't SPY moved more than the QQQ price-wise comparatively? Trying to understand why some people prefer to trade SPY and ES over QQQ or NASDAQ. It really depends on your cup of tea. ES is slower than NASDAQ. ES has more liquidity than NASDAQ. ES moves slower, pays more, but NASDAQ moves more and pays less. But since NASDAQ moves more, usually you can get paid more regardless, right? So like ES is $50 per point, but it doesn't move that much. Whereas NASDAQ is $20 per point, but that shit can move, $50 in the matter of 5 minutes. It's able to move 50 points in 5 minutes easily. Like, for example, yesterday it moved 75 points up down in 3 minutes. Now imagine if you're in a contract like that. That's another reason why people trade NASDAQ. How do you assess the volume is picking up in real time if you're here? Actually, this will be a good learning lesson here. I'm not going to go in depth with this one, but oh shit. Hold on. Let me get the link. Here it is. Yeah, so about not this one, not this one. Here's the thread. I would recommend reading this thread because people that think of volume honestly kind of get it like misconstrued. So take a gander at that Twitter thread. It really helps with like volume analysis. PayPal. All right. I'll answer, by the way, like 2 or 3 more questions. I'm gonna get off the call. So whatever you have, feel free to drop it in the chat. Here, let me check out PayPal real quick. Honestly, PayPal doesn't look terrible. As long as we can hold this preferably like $72, $73 area, it has a chance to fill this gap. Maybe not right away. It might take a couple of days or like a week or two to play out, but overall, it actually doesn't look terrible for an upside move. Good spot. I'm gonna keep this on I'm gonna write myself a note. Thank you. I appreciate you. Would you suggest VIX to trade just for Qs and SPY? I mean, not necessarily. You could technically use them for other stocks, but normally they're better to correlate with QQQ or SPY. Do you host more Zooms? Usually I host like 1 or 2 Zooms a week. So yeah. I appreciate you. I appreciate your kind words. What's your advice for someone who hasn't traded SPX? Not smart idea for beginners. Don't trade it then. If you're a beginner, if you don't have at least 10K in your account, you're not ready for SPX. That puppy will kill your account real quick. And also the spreads are so wide. I just don't see why people, I mean, I understand why people use it, because it can make you a lot of money really quickly. And people like that feel good euphoria, but it also can, blow your account just as quickly. So, to each their own. I personally just don't like, I've actually never traded SPX. I think I've traded like 1 time. What's a good stop loss to have when you do a swing trade? Probably 30 to 50%. Depends on the time expiration. Thanks for your newsletter. Great information. Hey, thanks. I appreciate you. I put a lot of work into that, so I appreciate that. All righty, last question. Anything else? Whoever has one more question, I'll answer it. What do we have? Anything? Setting up point of control. Yeah, so there's a thing called session volume profile. If you use TradingView, it's called SVP session volume profile. And your session volume profile looks like this. And your point of control is the red line. That is your point of control. Stop loss on swings anywhere from 30 to 50%, depending on your time expiration. Same for Thinkorswim. Unfortunately, Thinkorswim does not have session volume profile. They have volume profile. It's a little bit different, but it doesn't look the same as this. Same core values, just different layout. It's called volume profile. But anyway, guys, I appreciate you for listening. We definitely stayed a little bit longer than intended. If you have any questions, if you think of anything after the fact, I just dropped my information. Feel free to contact me. Don't forget, I am opening enrollment for my mentorship class starting in January. So if you're curious about that, I do plan to have the spots limited because I don't really want to have a large class. I want to make sure I'm focusing on the people. I really stride myself on that. So if you're curious about that, feel free to message me. Appreciate you guys so much. And I'll see you guys tomorrow. Here's my contact information one more time. Enjoy your night. Sleep tight. Love you guys.